Now we come to opportunistic investing, one of my favorite strategies. Opportunistic investing, to use a metaphor, is a lot like investing in small cap stocks, earlier stage companies where you've got work to do as an investor. The management team is trying to grow and trying to build something of real value. You're coming in at that early stage, so you get all the upside. Obviously, there's more risk involved, of course, but the upside, in my opinion, more than compensates for the additional risk. So there's three categories in opportunistic investing. There's ground-up construction, there's adaptive reuse, and there's going to be heavy renovations. Starting with the renovations, those are just properties where we're probably going to put 80+% of the purchase price in to renovate that project. So it's going to be a gut job renovation all the way down to the studs. On an adaptive reuse building, you're taking a building that might have been an assisted living facility and turning it into a medical facility. Maybe you're taking an office and turning it into an apartment complex, but you're changing the use. And then last but not least, ground-up construction. This is going to be starting from a piece of land, building something new. All three of these are opportunistic strategies. In opportunistic real estate investing, you're relying heavily on your fund manager to execute well on the strategy, because the execution of buying right, building or renovating right, and then releasing the property really builds all the value. So as an example of opportunistic real estate investing, if you're starting with ground-up construction, you've got to find the land, buy it, entitle it, zone it, get all the different approvals necessary to build, let's say, an apartment complex. That process can take 6 to 12 months. After that, you then are in construction, and that process can take another 12 to 18 months. So you're already 2.5 years into the project before you can start leasing. Lease up can take another 6 to 9 months typically. So 3 years and a quarter, you're finally producing cash flow. So as an investor, if you're investing in opportunistic real estate, your expectations should be the first 3 to 4 years, maybe even longer, will be no cash flow. Thereafter, you're going to start to see cash flow. And the benefit to investing in opportunistic real estate is that you're in at cost basis, the lowest possible price in the world of investing, and therefore your return is higher. The return profile for opportunistic real estate investing is typically a 5-year investment or longer. And in a 5-year underwriting, we're looking to double the value of the equity investment. So that means a 2x multiple on your equity. Starting with, let's say, $1 million, we're looking to get $2 million out in terms of the return of your capital, the rents that we get, and the profit from sale. And you're looking at an internal rate of return on the investment above 15%. That is typical underwriting for an opportunistic real estate investment. Those are the targets. And the reason why the return is so high is because there's more risk along the way. So talking about risks from an opportunistic investment strategy standpoint really depends on what it is that you're doing. If you're doing a heavier renovation, the risk is, of course, that it costs more. And then at the end of the renovation, once it's completed, are you going to get the rents that you're thinking you're going to get to justify all the money you put into the project? Moving into adaptive reuse, there's risks around, will I get approval to change the use of this asset from an office building, as an example, to residential? And that approval process is really important. And then, of course, all the execution risk that comes around the renovation itself and getting those rents that you're expecting to get. That's where the risk comes in. And then in ground-up development, you've got the risk of the acquisition. Will you get the rights to build what you want to build? And then will the building happen at the right price with the right timeline and eventually produce those same rents? So all along the way, you're managing these different risks, and anything you can do in the investment process to take those risks down or reduce those risks makes a better rate of return and risk combination. So what are some of the things you can do to actually reduce the risk of opportunistic investing? Well, one thing you can do is you can reduce the leverage. As an example, in our Opportunity Zone fund, we're doing opportunistic real estate investing, but we're only using 50% or less loan to value. So with less debt, you can make mistakes along the way, or you can have delays and still produce a great profit and a great rate of return. Another thing you can do is try to reduce specific risks. So getting a fixed price contract for construction reduces the risks of overrun. Maybe getting a tenant in tow, so having a tenant already signed up to come into your building prior to building it, that also reduces the risk. And anything you can do to reduce those risks gets you that same rate of return with a lower risk. As an example of risk reduction, right now Caliber is in a partnership to build 20 to 30 behavioral health hospitals across the country. And we're doing so with a credit tenant, a great tenant with great credit who's willing to sign a 15-year lease prior to us building the building. So we know when we get it built, we get it occupied, and the risk is only secured around getting the building built and doing site selection. The opportunistic strategy is the best strategy in real estate investing if you want to grow your wealth, and it's a strategy that Caliber is an expert in. The reason why is you get the best rate of return. You can reasonably expect 15 to 20% a year or better, and you can expect to double the value of your equity every 5 years or better, as long as you execute on the strategy appropriately. The best way to grow your wealth with Caliber is to invest in opportunistic real estate investment. It's a strategy we're an expert in, and it's really focused on growing the value of your portfolio over time using these different techniques of ground-up development, adaptive reuse, heavy renovations on properties we've bought well at the right price and then we execute well on along the way.